Hello and welcome to the Money Show, your one-stop destination for all your personal finance queries. I'm Kavita Thapliyal and we have lined up a power pack show for you today where we'll be talking about ETFs and we will also throw on the counter to get your mutual fund portfolio queries answered. Just in case you want to send across your questions, you can do that on our WhatsApp number, which is 865-797-4571. You can also email us your questions on themoneyshow@etnow.tv. So a great lineup of content where we'll talk about your investments, your spends and your saving strategies. But then before that, let's get to the top headlines of the hour. Another week, another lifetime high on Dalal Street. Nifty hits 22,100 for the first time ever, helped by stellar gains across IT stocks. Broader markets too end at record high. "90% of the market seems to be overvalued." That's the word coming in from Sanjeev Prasad of Kotak Institutional Equities. He adds markets are mostly ignoring many medium-term risk. LIC shares on fire in trade today after it received a refund order of rupees 25,464 crores. The insurance company to also contest IT orders to the tune of over 3,400 crores. HUL versus its Maharashtra distributors, row heats up. Distributors of FMCG majors stop supplying Taj Tea. ET now learn distributors to stop supplying HUL products in a phased manner. Right, so today on the show we are going to talk about ETFs and especially focusing on the ETFs offered by Nippon mutual fund, where we are seeing, as far as the numbers in their volumes are concerned, it's beating their peers and the benchmark itself. So how has the strategy been as far as the ETFs are concerned? I am joined by Arun Sundaresan, Nippon India Asset Management. He's the head ETF, Nippon Life India Asset Management. Arun, good evening and welcome to the show. We'll be discussing about the ETFs which are seeing substantial numbers as far as the performance across the board are concerned, especially the volumes. I really want to understand the trigger. Before we get into the nitty-gritties and talk about it category-wise, I want to understand the trigger behind these significant volume numbers.
Thank you, Kavita. Thanks for having me on the show. So obviously, ETFs and index funds, passive funds as they're called, they've been picking up significant traction over a period of time in the mutual fund industry. Already, the total assets under management in these type of funds is around 8 lakh crores. Particularly talking about ETFs, the exchange traded funds, they've been around for quite some time now. And the topic for today's discussion, what we wanted to talk to you about, is the liquidity in ETF, how critical that is, when it comes to your investment. Obviously, the liquidity gets built up over a period of time. Some well-established ETFs like ours, for example, which has been around since 2001, and they're quite popular, leading to higher volumes and higher liquidity, which in turn has lot of direct implications for investors. At the same time, there may be other ETFs in the same category, which may be relatively small, and the liquidity could be very minimal. So all these things have a very, very significant impact as far as investments are concerned.
Arun, so if you talk about fund categories, Nippon India ETF commands more than 50% of the volume and commands 65% of the volume in flagship Nifty ETF. We will talk about the liquidity and we'll talk about the ease of investment also. We'll discuss about the costing that's involved, when one wants to invest in the passive way and, wants to invest via an ETF. I want to understand, is this the volume numbers that we are talking about, Arun, is it a short-term trend or you've been seeing a continuity in this trend?
So these volume numbers, Kavita, these are daily average volumes for the last 1 year, 3 years, etc. So we're not talking about a very short period of time. These are average volumes over a period of time. And these data are available in public domain. In fact, in the stock exchanges, NSE or BSE, all investors have to do is type the ETF, just like how you search for a particular stock, you type out the ETF and then select a period, you will get to know what are the kind of volumes that are happening in that particular ETF. Then, as investors, if you're comparing and if you're considering investing in a particular category of ETF and you're comparing, let's say, two or three different ETFs, you can just check what has been the volume. That's number one. Second, there is also this figure which is published called impact cost. IC impact cost, that number also is a very critical number. In fact, for our Nifty ETF today, if you go and type and search in the exchanges, you will find a number of 0.02. So what it means is that suppose 100 rupees is the NAV, and if you are buying or selling with 0.02% difference, you will actually be able to buy or sell. On the other hand, some other ETF where the volume is less and therefore the impact cost is high, and we have noticed that in some ETFs, even in large categories, that number is as high as 1% and sometimes even 2%. Now, what that means is we just talked about Nifty hitting a lifetime high of 22,000. Suppose you are selling Nifty, if the impact cost is 1%, you will be selling it at 200 points lower, not at 22,000. That's the kind of impact it will have on your return. So expenses, there are other aspects, but this impact cost because of liquidity or the lack of it, if it is very high, that directly affects your investment. Therefore, investors will have to pay attention to this.
Exactly. So you think that liquidity has to be one of the main factors, impact cost has to be one of the main factors when one is investing in an ETF?
Absolutely, absolutely. In fact, all these concepts are related. Higher volumes lead to higher liquidity, obviously, and that results in lower impact cost, and that has a direct bearing on returns. The other aspect to keep in mind is the expense ratio. But generally, most of these ETFs anyway tend to be low on expense, and they may be comparable. But the moot point here is that you should not be guided only by the expense ratio. A fund having a lower expense ratio, if on the other hand the liquidity is poor and if the impact cost is very high, that may defeat the entire purpose of low cost investing through ETFs.
So, Arun, how can you exactly place an ETF in your portfolio? If I have to discuss the portfolio placement of having ETFs in their portfolio, what should be the kind of ETF that one should be opting for if one is wanting to have a passive exposure in their portfolio? How should be the strategy looking at the current market situation?
Sure. So ETF or any passive investing is just one way of investing, right? There are various types of investing. There's just one type where you do not take an active call on which stock to buy, how much to buy, sell, etc. You simply buy the index and you just replicate a particular index in the case of ETF. Again, within that, there are a lot of different types of funds or different categories. So there are market cap based ETFs or index funds. For example, Nifty, which is again the top 50 stocks, which is large cap stocks. You have that. If you want to play the broader market, there are mid cap and small cap strategies as well. So all these strategies can be considered as diversified categories where you're playing a particular part of the market. So if as an investor, if you prefer to play small cap, you can do that through passives, through index and ETFs as well. Likewise, there are other strategies as well. There are sectoral or thematic offerings as well. For example, as an investor, if you like banking, off late, for example, IT has been buzzing. So you're confused as to which stock to buy, how much, when, etc. Each of the company results are very, very different. Their movement could be different. But you like IT as a story, you simply go and buy a IT ETF or a IT index fund. That's another way to play these passives. Then there are also interesting strategies, what we call as smart beta or a very nuanced or niche strategies. For example, low volatility, combine alpha with low volatility, momentum. There are various strategies that you can do. Dividend yield. If you want to play public sector banks, PSU banks, you have options there. If you want to play the public sector basket, we have a ETF called the CPSE ETF, that is a Central Public Sector Enterprises ETF. So there are a whole lot of options available within the passives. But the key difference here is that there is no active fund manager involved in terms of selecting within IT, let me buy this more, that stock less. That decision is not there. Otherwise, even in passives, you have a whole lot of very, very interesting options.
Sure. Just going back, I want to understand how has the ETF as a space performed since its inception, or how has the evolution been?
So they've been growing quite substantially over a period of time. As I said, already they are reaching close to about 8 lakh crores. A combination of institutional investors, individuals, high net worth individuals, and gradually even retail investors are getting into this space. But we still have a long way to go. In the developed markets, obviously, passives account for a significantly larger portion of the overall AUM. In fact, in many markets, the passives are larger than the active funds. In India, the concept is just picking up, but it's rapidly growing. The pace at which it's growing, one can expect that the overall size of this space, particularly, is likely to be significantly higher as we go along.
All right, Arun, with that, it's a wrap. Thank you so much for being on the show and helping our viewers with their investment strategies while ETF is concerned. Thank you so much.
Thank you.
All right, time for a quick break on the Money Show, but then post that, we'll be having our viewers' questions answered live on the show, just in case you are someone who wants to ask any question via WhatsApp or email ID. You can do that. On the screen, we'll be flashing our WhatsApp number and email ID, and we'll be doing your financial planning on the show.